The local unit hit a one-month low against the greenback last week, this after being battered by looming threats of credit ratings downgrades. Fitch Ratings further revised its outlook on the country's sovereign debt downwards, citing increased support for struggling power utility Eskom as just one of the factors. And joining me on the line to discuss the rand's movement in that context is Lukman Otunuga from FXTM. Thanks so much, Lukman, for your time this evening. So as I say, the rand's experienced its worst week in 5 months, and that after we had Fitch Ratings downgrade its outlook on South Africa's debt to negative on Friday. Surely this was priced in, though, given Moody's comments that came through on Thursday already prior to Fitch's announcement.
I agree with you. You simply answered the question, and this is why we can see the rand shaking off the hangover from last Friday's sell-off. It's actually appreciated against every single G10 currency, including the dollar, and it's one of the top performing emerging market currencies today. So really, this leads me to believe that the downgrade to the credit rating outlook from stable to negative simply acted as a wake-up call last week, and the government wasted no time on Friday explaining their actions. So it remains to be seen whether this explanation has actually played a role in the rand's upside. So with what Fitch said, they've simply cited the same themes that we've been hearing over the past few months. Lackluster growth, they're predicting 0.5% in 2019, concerns of the debt to GDP soaring as high as 68%, and of course, the big elephant in the room, Eskom. Fitch's decision does add to the risk of the country losing its investment grading by Moody's in November, and we all know what that means. If Moody's does downgrade South Africa's rating, this could result in Citigroup's World Growth Index being dropping out of it, and this may result in investors aggressively offloading South African assets. But still, I still believe there's a lot of light at the end of the tunnel.
Okay, that being said, though, are you surprised that it's taken so long for the penny to drop, Lukman, with so much of the activity that we have seen over the past couple of days triggered by credit ratings agencies' comments?
Yeah, so the reason that happened was, I believe, the developments revolving around Eskom, that was enough to tip things over the balancing point. But still, even though the South African rand and economy may be exposed to this uncertainty, if you look at the rand's valuation, I still believe that the rand and the outlook for the South African economy is more concerned with external drivers, and this was simply illustrated today.
We've got issues around Eskom's debt and government debt dominating. We've got global issues, as you say, driving a lot of direction as well. As an investor looking in to South Africa, how much attention are you paying to things like what's going on in the courts? Just today, we've had the court suspending Public Protector Busisiwe Mkhwebane's remedial action against Public Enterprises Minister Pravin Gordhan.
As an investor, of course, this adds to your uncertainty and may reduce appetite for South African assets. But when I'll be looking more about the fact that tomorrow there will be the resumption of U.S.-China trade tensions, the fact that the Fed is en route to cutting interest rates for the first time in over 10 years, which is good for the South African rand. I'll also be looking at the fact that the possibility of the South African Central Bank cutting interest rates again in 2019 in an effort to stimulate economic growth. So while domestic risks are there that may impact appetite for South African assets, external drivers are there to offer a buffer.
Yeah, and especially as far as the dollar is concerned, because we've got, a lot of focus on the fate of the rate, as we called it at the top of the show. Lukman, what are you pricing in this week when it comes to the U.S. Federal Reserve's decision on interest rates, and more so, its dot plot from here on out?
Yeah, it's almost a done deal that the Federal Reserve will cut interest rates by 25 basis points, especially given the impressive GDP report we experienced last week. What I'll be more concerned with is what the Federal Reserve does beyond July. Are we going to see an insurance rate cut, or is the U.S. jobs report on Friday going to strengthen the argument for the Federal Reserve to take further action and cut interest rates further into 2019?
Absolutely. Well, it's certainly something that we've all got our eye on. We're going to leave the conversation there at this point. Lukman, thanks so much for having joined us on the line this evening. Lukman Otunuga is with FXTM.